Retail sales were a bit of a disappointment, causing the market to pull back just a little bit here on Tuesday morning. I'm here with Ben Willis from Sunrise Securities. So, Ben, it certainly wasn't the number that the market was expecting, although, it is January and, people aren't shopping as much as they are in December.
The expectation, though, is the American consumer was back. The problem with this is it became the third straight month of disappointment. That trend line is not something we've seen in about 4 years, not a very good indicator. So even the numbers themselves, we knew January tends to be a letdown compared to the boom time, although January has that after Christmas shopping week with the gift cards, but it still didn't meet expectations. If you just looked at those simple headline X autos, it looked all right, but I think the biggest impact on the headline today was actually the revisions, not necessarily this month's numbers.
Right, they did revise December down. It was flat. There were a couple of companies that did do well, Target, Costco, but the mid-level department stores like Macy's did not do well.
Right. I hate to use this word, bifurcation of the market, but you have Target and you have Tiffany's. That seems to be the way that the consumer market is driven right now. You're either catering to the discount player or to the well-to-do that are not seeing any real reaction on this recession we've gone through. So depending anywhere in the middle, the JCPenney, the Macy's, you see JCPenney trying to change their stripes. It's been a tough road for anybody in the in-between market.
Okay, so if we've got this kind of backdrop with our own consumer still, kind of just squeaking along, and then we've got the Greece backdrop, we certainly have not had a lot of volume here at the stock exchange. So is this starting to build us up for some sort of pullback?
I hope so, and I don't mean you have to make people realize when I'm looking for a pullback, I'm not a villain. I think it's healthy for the market. You have to look back at this market going back to actually September and look at the trajectory we've been on. The market needs to pull back. I'll use the old line of it. It's a rose bush. You need to prune the rose bush if you want to continue to grow. We need to see this market pull back. The leadership has been very narrow, very focused. It's come mostly from the tech side, Apple in particular waiting. So I think the broad market needs to see some sort of release of the pressure that it's been building to push it higher. The problem is, as you said, with the lack of volume, the only people in this market right now are professional traders, and there tends to be a heavy weighting on anticipation of this drop. So it's kind of like waiting for Godot. Everybody knows it's coming, and everybody's trying to set up the trade, but you can't stay short into this market because it keeps rallying in your face on the short covering at the end of the day.
All right, so ultimately, retail sales not what the market had hoped. And so along with that and the backdrop of Greece, we are setting ourselves up to have a pullback, but big money players are keeping us from happening. That's Ben Willis from Sunrise Securities.